I'm indeed happy to be present amidst all of you today for the post-lunch session to take these T2 training level into more details. I think the morning session was on overview on GST and also the overview on the model GST law. Those were very, very introductory sessions. Starting from this session, I think the next 4.5 days, you're going to deal with the model GST law in all its details to the extent what it is there in the public domain. The topic which I will be talking to you in the post-lunch session would broadly cover 3 areas. 1, the meaning and scope of supply. The second, the time of supply. The third, on valuation of supply. When I am going to talk about supply, I am also would broadly touch upon the schedule approach, schedule 1 and 2, which is a part of the model GST law. Before I start the topic, let me put a rider that what we are discussing is a model GST law, not the final. Nonetheless, this draft is a roadmap, or for that matter, a broad blueprint as to how we are planning to introduce the GST bills both in the Union Parliament as well as at the state legislatures. While the model GST law has evoked tremendous response among the stakeholders in the last 60 days or so when it is in public domain, the one thing we as tax officials participating both from the Government of India and the state need to appreciate is this, that this is the common minimum program what we have agreed upon while we put this draft law in the public domain. The effort is to bring in consensus. While the Central VAT Administration has been taxing goods at the manufacturing stage and taxing services up to the ultimate consumption level, the state VAT authorities have been taxing on goods up to the retail level. When we are talking about a law like this, where the taxable event itself is not merely the taxable elements with which we have been so far dealing with, the challenge is how do we address the concerns for the future. The effort of bringing in the model GST law in the public domain is only to ensure that this law gets better refined. As department officers, as you get more familiar with the concepts, my request to all of you is that never hesitate in giving your feedback as to what you feel in terms of specific provisions as to what further improvements could be made. Because each one of you present in this room today, if I put together the number of years of working experience you all have, it will amount to several thousands of man-hours of experience of administering the taxes. So your feedback, your constructive suggestions in form of providing the suggested changes with adequate justifications can go a long way in improving this legislation, which is termed as a path-breaking reforms in this country's history of indirect taxation. With that beginning, let me talk about the concept which the first part of my session on supply. As you all aware, supply is a taxable event in the GST. The entire edifice of the GST is built on the concept of supply. On supply, neither the experience of the central VAT administrators nor the experience of the state VAT administrators is complete insofar as looking at this concept. We need to keep our mind open to that extent. While at the manufacturing stage or in the provision of services stage, while the officers of CBEC have enough experience, and so also the state VAT officers in administering tax on sales, we need to look at supply much beyond that. What I will do is, before I get into this meaning and scope of supply, let me straight away take you to the international perspective, how internationally this concept is evolved over a period of time and how it's being defined. And that will put across the basic approach as to what made into making this definition in the model GST law. I'll straight away take there to the international law, how it is being worded. VAT is being currently administered in more than about 140 countries globally. Either it is called a value-added tax or a GST. We are not the first country to introduce this concept. Most of the advanced countries which are dependent on consumption taxes as a major source of revenue as administering one form or the other, the VAT or the GST. The European Council directives, the EC Council directive which we talk about for 2006, is come out with a comprehensive documentation on VAT directives. The 2006 directives, it's available in the Google. You can Google it and see this documentation. This EC directive is in a form of a document wherein it defines the concept of supply, what constitutes a supply of goods, what constitutes a supply of services, what are the provisions relating to the place of supply, be it goods or services, how does the consideration is arrived at for the purpose of determining the taxable value, and other issues relating to administering of VAT. So I think a good beginning can be made for understanding the GST, the supply concept, by referring to this document. And this is not that old, it's 2006, it's just about 10 years. And these council directives have been comprehensively reviewed, and we have the revised directives in 2011, and as latest as 2014, again the VAT directives with regard to place of supply has created a document called a green paper on VAT, and further discussions went on with regard to the place of supply. The VAT, the EU Council Directive 2006 defines supply, in particular with regard to supply of goods, as the transfer of right to dispose of tangible property as owner. Supply means the right to dispose of tangible property as owner. The word here is the transfer of right to dispose the property as a owner is similar to what we have defined sale. Sale we define as right to transfer the title to the goods. When there is a transfer to the title of the goods for a valuable consideration, either for cash or deferred payment or a future consideration, that is a conclusive definition of sale. Now this definition would look at that from the point of view, that is right to alienate the title. Here we are talking about tangible property, we will cover that a little later. Additionally, the following shall be regarded as supply of goods: transfer of the ownership of the property, actual handing over of goods pursuant to a contract for hire of goods, where ownership is to pass at the latest upon payment of final installment, your hire purchase arrangement, transfer of goods pursuant to a contract under which commission is payable on purchase or sale, your agent principal relationship, handing over certain works of construction as supply of goods, your works contract. Now you can connect. The EC Council Directive definition on supply by and large relates to a concept of sale, what you have been already familiar with. If you look at supply of services, which is not what you have known so far, shall mean any transaction which does not constitute supply of goods. This is what Article 366(12)(a) of the Indian Constitution also defines. Supply of service means anything other than goods is supply of services, though we don't use the word supply in the Constitution. Supply of services may consist inter alia any one of the following transactions: assignment of intangible property, obligation to refrain from an act or to tolerate an act or situation, performance of services in pursuance of an order made by or in the name of public authority or in pursuance of law. Specified transactions shall be treated as supply of services for consideration. When we talk about services, anything other than goods is services, and that services is dotted with a restriction that it has to be for a consideration. It has to be first other than supply of goods, and second it has to be for a consideration. That is a hallmark of defining how we define service. We will also discuss in the part of the session how do we define currently services in our central VAT law? Now, if you look at, these are the EC Council directive with regard to the 2006 directive. The UK VAT law, which is one of the parent mother VAT law, which is a good example to start with, defines supply, includes all forms of supply, but not anything done otherwise than for a consideration. It's an inclusive definition, but it makes it very, very clear. A supply has to have a consideration. If there is no consideration, there is no supply. So that is the fundamental requirement. Anything which is not a supply of goods, but is again done for a consideration, including if so done, the grant, assignment or surrender of any right is a supply of service. You can see the EC Council directive is repeated here. A taxable supply is a supply of goods or services made in the United Kingdom other than exempted supply. In other words, goods and service tax, the constitutional amendment defines the tax imposed on supply of goods and or services, right? Which is a taxable supply. A taxable supply is a supply which is subject matter of a tax under the concerned legislation. Continuing with that, this is the charging section of the UK VAT law. VAT shall be charged on any supply of goods or services made in the United Kingdom where it is a taxable supply made by a taxable person in the course of furtherance of business carried on by him. You can note the word here, in the course or furtherance of business. We talked about, first when we talk about supply of goods, we said it is the right to alienate the title to the goods. When we talked about supply of services, we said anything other than goods made for a consideration is services. Now we are coming to this, it is done by a taxable person in the taxable territory, in the course of furtherance of a business. Then the other part is, Treasury may by order provide with respect to description of any transaction that it is to be treated as supply of goods or that it is to be treated as supply of services or that it is to be treated as neither. If you look at our modern GST law, more or less I think similar provision exists in section 3 and 3. Australian GST. Australian GST has got a different flavor. When we talk about the international law, look at the EC Council directive as a starting point. Look at UK VAT law, Singapore VAT law and the Malaysian VAT law, they fall in one line. Then you look at for different flavor, Canadian GST, which is a GST which is more or less akin to the federal and the regional sales tax. Then you have Australian GST, which is very, very simple, easy to comprehend. That's why I put across the Australian GST in this presentation. If you look at Australian GST, it says a supply is any form of supply. You look at UK VAT law, it includes all form of supply. Here it says any form of supply and includes supply of goods, supply of services, a provision of advice or information, a grant, assignment or surrender of real property, a creation, grant, transfer, assignment of surrender of any right, a financial supply. When do you make a supply, taxable supply? You make a taxable supply for a consideration and the supply is made in the course or furtherance of enterprise. The word business is replaced by the word enterprise here. The supply is connected with Australia, that is provided within the taxable territory. You are registered or required to be registered taxable person. However, the supply is not taxable supply to the extent that it is GST free or input taxed. Singapore GST is a part of the UK VAT law design. You can look at it. Supply, again, it's an inclusive definition. Includes all forms of supply, but not anything done otherwise than for consideration. Anything which is not a supply of goods, but is done for a consideration, including if so done, the granting, assignment or surrender of any right is a supply of service. Then the third point is the same thing. The government's power to declare an activity as a service and nothing else, or activity of supply of goods and nothing else, or neither, but still it may be a subject matter of tax under that statute. Canadian GST, this is slightly different. Many of the friends in this room must be wondering, when we drafted this law, why at all when we are starting a law of a GST which is said to be the path-breaking reform in the entire post-independence era, a taxable event, why are we saying it should be inclusive, it should be a clear-cut definition explicitly providing what you mean by means, what is meant by supply. Canadian GST law provides an exhaustive definition. It starts, supply means subject to section 133 and 134 of that act, the provision of property or a service in any manner, including sale, transfer, barter, exchange, license, rental, lease, gift or disposition. It gives you an inclusive definition, but it means a provision of goods and or services. Taxable supply means a supply made in the course of commercial activity, enterprise in the course of furtherance of business. You may substitute the word. Supplier in respect of a supply means the person making the supply. Exempt supply means a supply included in Schedule 5. It defines service means anything other than property, money, and anything that is supplied to an employer by a person who is or agrees to become an employee of the employer in the course of or in relation to the office or employment of that person. Even today, under the Central Service Tax Law, a service provided by the employee to the employer in the course of employment contract is not taxable. It is outside the scope of service definition. Property means any property, whether real or personal, movable or immovable, tangible or intangible, corporeal or incorporeal, and includes a right or interest of any kind, a share and a chosen action, but does not include money. Now, if you look at these 6 VAT laws from where I have put the extracts, certain delineating features will be very, very visible in going ahead with defining the scope of supply. What are they? Just it's a matter of repetition. Malaysian GST is the latest GST, 2015 GST law. It's been in force for the last 1.5 years. It follows the UK VAT model, defines what is the supply in an inclusive manner, in the means manner, but it also says what is service other than goods and the schedule approach. Now, having said this, let me go back to my original, I get back to the meaning. 6 international VAT laws define supply either in the form of inclusive manner or in a specific way. The Canadian GST law says is one thing. It is supply of goods, supply of services for a consideration done by a taxable person in the course or furtherance of business. Right? These are the essential elements which comes into the picture. Now let us take about these individual elements one by one. And this is what the section 3 of the model GST law also covers, albeit there may be some shortcomings. The first, it has to be supply of goods and or services. Now, what are goods? What are services? The Constitution defines goods, the Constitution defines services. And our individual existing laws on taxation, be it Central Excise Act or for that matter Finance Act 1994 or for that matter individual VAT laws of the state or the Sales Tax Act, which was the preceding legislations, define sometimes what exactly meant by goods. In the Excise Act, it is accessible goods. In the sale, it is sale of goods. In provision of services, it could be in the form of service, what we have defined post 2012. So it has to be goods or services. Now, when we talk about goods, goods are something which is tangible, which is physical, which can be touched, felt, transported, right? Something which is physical is goods. The goods, probably when we talk about goods, there could be alternative approach we could have adopted. We could have said property, movable property, immovable property, tangible or intangible property. Canadian VAT law uses the word property. Now, why we chose to go for goods instead of using the word property? Now, when we talk about tangible property and the goods, more or less the understanding is the same. When we talk about an intangible property is in the realm of services, but it may also have some relations with regard to the goods per se. That means where title to the goods is not transferred, but possession is transferred, there are rights. So, in order to have a comfort with which what we have already been familiar with, taxing goods, we have a conceptual clarity. So also in the services, we have evolved the taxation of services over the period of 20 years. So provide that which is very comfortable, understandable, interpreted. Because today when we are going to talk about GST, let us not forget that GST is about goods and services. And on goods and services, we have more than 60 years of jurisprudential interpretation as to what is goods, what is services, what is sale, what is manufacture, what is provision of service, what is dominant nature of what is dominant nature of the transaction, pith and substance, all those will still be relevant in the GST, albeit the fact it may have a different flavor. So when we use the words goods and or services, instead of using tangible, intangible property, my friends, I just want to tell you that we are just not following an international law as a copycats. We have our own knowledge, we have our own practical experience in administering tax. So that's why we said goods and services and not property, intangible or tangible property. When we talk about goods, we need to keep it in mind. First, the question often asked is, do we need a difference, segregation between the goods and services in the post GST? If the taxable event is supply and if tax rates are uniform, why do we need this difference between the goods and services? Because in the modern world, to have a pure transaction involving supply of goods or a pure transaction involving supply of services could be very, very minimal, but there could be always a supply which is composite in nature, which consists of a combination of more than one type of goods or more than one type of services, or it could be a combination of both goods and services. So why do we at all have this distinction? Now the reason behind the goods and services distinction will be as elementary as its nature is, basically for the reason, goods something which you can feel, touch, you can track. Where they are produced, where they are provided, where they are consumed can be easily identified because of their physical visibility. While in the case of services, it is very difficult to presume or to come to a conclusion where the services are provided, when the services are provided, where it got consumed and when they got supplied. So in the sphere of services, we need to provide for the legal fictions, deeming proxies in order to determine the most reasonable point where it is said to have been provided or where it is said to have been consumed. Now therefore the conclusion is that the distinction between the supply of goods and supply of services will be relevant even in GST, because the time of supply provisions and the place of supply provisions governing goods and services are quite distinct. It is not only so in our model GST law, internationally the time of supply and place of supply provisions are quite distinct. And this distinction is going to come into a full interplay because tomorrow we are going to administer the tax on services at a sub-national level. Today we administer the tax on services on a pan-India basis by single government. We are only concerned with the cross-border supply or cross-border trade of services. I think my central VAT friends here will be supporting me on the view what challenges we have in administering services even at a cross-border level. We had an export of services rules in 2005. We had an import of service rules in 2006. We administered this for a period of 8 years. Then we had a whole lot of challenges as to when a service is said to have been exported or when a service is imported. We brought in a place of provision of services rules in 2012 by a statutory enablement when we went to a negative list of taxation. And over a period of last 4 years, we are yet to settle as to what exactly constitutes a place of supply, even in case of cross-border services. Now, at the subnational level, when you are going to talk about 29 VAT administrations and the union territories, we are talking about services which are criss-cross supplied across the taxing jurisdiction. The place of supply is going to crucially determine where the taxes are to be paid, to which jurisdiction the tax revenue shall accrue. Because all said and done, consumption taxes should be ideally destination based. Today's taxation is a distortion to that basic principle. One of the ideals of GST is to ensure that the taxes follow the destination where they are ultimately consumed. Naturally, these taxes are supposed to be 100% business neutral. The entire input tax credit documentation, what we are talking about, is towards that. Seamlessly, the credit should flow across the businesses and the tax should get attached only at the ultimate point of consumption. So that is why the difference between the goods and services will continue to be as relevant. So the first requirement in the supply is it has to be supply of goods and or services. Now the only exception we can look at it is a pure transfer in title in the land or a pure transfer in the title to the immovable property. That could be a subject matter which could be outside the scope of GST. But any rights accruing on account of the immovable property, any easement, any rental, lease, assignment, all those could be subject matter of taxation in the GST. That's the first. We will discuss with that in the next slides a little more detail, just to give an intro. The second is supply in India. When we talk about tax, we talk about tax with regard to two things, rather two approaches. One is called a global approach, another is called a territorial approach. A tax has its jurisdiction to the territory to which it applies. Now suppose if we talk about services today, the Finance Act 1994 says the provisions of this act shall apply to whole of India except the territory of J&K. Even though J&K is a part of Indian Union, we exclude it because we have been levying service tax under residual entry 97 of list 1, and that application to the J&K will have to have the concurrence from the state legislature in order to be applicable. We don't exclude J&K for the purpose of levy of excise duty, but we do exclude it for the purpose of services because tax is levied under residual jurisdiction. Now, one is that when we talk about tax, the territorial reach is one approach. The another is a global approach. What is a global approach? That means irrespective of where the income is earned or activity which is getting taxed is actually performed, so long as the tax domicile of the subject is within the territory of that state, that subject matter will be subject matter for tax for that income earned. For example, if I am a permanent resident in India and I earn some income in US, even that income which I have earned in US in the global approach will get taxed at my hand in India because of the global approach of the taxation. Now, indirect taxes by and large follow the territorial approach. So, we consider that anything which is supplied within India alone should be a subject matter of taxation under GST, and this is what we have been currently following. Your VAT law has got a jurisdictional approach to your state jurisdiction. So also the Central Excise Act with regard to all India, the Finance Act except J&K, what I told you. The challenge comes in supply in India will be with regard to the territory which is beyond the landmass. Now, when we talk about India, we have a well-defined definition of India in the Constitution, in various taxing legislation including our Finance Act. India includes the landmass, no issue. India is divided into states by state jurisdiction, union territories, no issue. 12 nautical miles of territorial waters, no issue, which is contiguous to the landmass. We have also beyond that, we have a concept called exclusive economic zone, continental shelf, etc. Now the question comes is, when we talk about India, we talk about India as a whole landmass, which is divided into at a subnation level with the state and union territory jurisdictions. But when we talk about the territorial waters, that also could be aligned. But when we go to that exclusive economic zone, we don't have an absolute sovereignty over the territorial waters, exclusive economic zone beyond the territorial waters. There the direction is basically with regard to the certain rights which you enjoy in that international territory in form of exploitation of natural resources. So you don't have an absolute sovereignty. By an international convention, India being a signatory, it enjoys the power to exploit the natural resources under the sea, over the sea or this airspace only for that limited purpose. Now, how do we, when the entire, for example, tomorrow you will be talked about in the GST about registration. Now, registration is going to follow the route of the state-wise registration. Assuming that certain economic activity or a business activity is undertaken exclusively in the economic zone, to which state jurisdiction that registration will have to be attached? Because today you know your IGST is a sum total of the CGST and SGST, where there is a part of state ownership is there with regard to the tax. When we are talking about levying an IGST in the EEZ, to which of the state that revenue should go? Those are issues. So when we talk about supply of India, kindly flag it. It's a landmass, clear definitions we have, but we do have challenges in EEZ and continental shelves. The next is consideration. Now what is consideration? Consideration is something which is given in return. What we call it is a quid pro quo, reciprocity. Now when we talk about consideration, consideration could be either monetary or non-monetary. Even if it is non-monetary, it is always said it should be capable of being expressed in monetary terms. So consideration is very essential because internationally you have seen in UK VAT law, or it is in Malaysian VAT law, or for that matter in Australian VAT law, the supply has always been marked with a limitation that only when a transaction is done for a consideration, it is a supply. In our model GST law, we have traveled a little beyond, and we have also provided a schedule approach where we said there will be a concept of a deemed supply even without a consideration. We will come to the rationale as to why we have gone for that little later, but consideration is the fundamental essential requirements of a supply, even internationally. So Consideration even today, if you talk about the sales or the VAT subject, for you consideration is a must before taxing it. Am I right? Right. I think please stop, because what I am talking about topics, while you take attention, while you make attention to listen to this, if you something bothers you, something troubles you, please don't hesitate in stopping me and ask me the question. Right. What we are talking about is basic concepts. I would like in the second half of the class to be more interactive, but as I present the topic, when you have the complete flow of the entire concept of supply, you are free to ask me questions. But please, even before, if you have any doubt on any issues where I am talking, please stop me and ask me the question. I am comfortable with that. Okay. Now, when we talk about consideration, the consideration has to flow from the recipient of the supply to the provider of the supply. That is the norm. But that is not exclusively a requirement. A consideration can flow from any third person to the provider of the supply. That means even if it is a subsidy given by the government for a supply between the two private individuals, there is a supplier and the recipient, even such subsidies could be considered as a consideration towards the taxable supply, provided it is prominent, direct, proximate and linked. Anything which is remote, anything which is not direct may not be a consideration. So, consideration is reciprocal, consideration is quid pro quo. It is in return for providing the goods and services something given, which could be monetary or non-monetary. It could need to flow not necessarily from the recipient of the supply to the provider. It could start from anybody who is a third party to the privy to the contract. Next is very, very important in the course of furtherance of business. Now, this is something which both of us have not worked with so far. When we talked about manufacture, for purpose of levying excise duty, there is no need to refer to the consideration. As a result, if a process which amounts to manufacture has been addressed, irrespective of the fact whether somebody has paid the consideration for or not, it was still a subject matter of taxation and excise duty. That is why we have a concept called captive consumption. If I manufacture something and I consume it for my own further manufacture, I am liable to pay tax. It's another matter that in order to ensure that the tax neutrality principle is followed, instead of collecting the tax, providing as a set off in the form of a credit, you allow that exemption to continue until the final stage of value addition before it is cleared on payment of duty. You would have provided a captive consumption exemption. So, consideration was absolutely irrelevant in the course of excise, in the business test. Now, when we talk about in the course of furtherance of business, if you look at your VAT law or the sales tax laws, basically whether the sale resulted in a furtherance in the commercial activity was one consideration, but not an essential or a complete consideration. If we talk about services, we do have this concept of in the course of furtherance of business in the form of whether it is provided in the course of commerce or business. Now, what is this in the course of furtherance of business? Now, anything which is done by the business can alone be a matter of concept under supply. Now, as you all seen in the supply said goods or services done for a consideration, provided in a taxable territory. So far what you have understood. Now, many things which are non-serious in nature, which are not intended to be a commercial transaction per se, would also get the mischief of attracting levy if you don't mark it with this restriction in the course of furtherance of business. What is business? We have defined in the section 2 of the model GST law to mean trade, commerce, manufacture, vocation, profession, calling, employment, etc. Whole lot of things we have said. In addition to that, we said business includes any expenses incurred for commencement of the business, closure of the business, any incidental or ancillary activity related to the trade, commerce, manufacture, vocation, profession, etc. We also said any services for the club to the member and vice versa, agent and principal, an aggregator, etc., etc. By and large, when we talk about business, we mean business as a commercial enterprise. You have seen the Australian GST, it said enterprise. Somebody said business. So, basically when we talk about business, we need to keep it in mind, something which is done in a regular manner, frequent manner, there is certain amount of consistency in the way in which it is being performed. It is may be done for a profit, while profit is not essential criteria to define a business. Profit making is a normal course of things. and it adds to turnover in a periodicity if you want to aggregate. Both of us administer tax with threshold level exemptions. Why do we give a threshold based exemption? Because the frequency or the volume of the transactions done by a particular entity, if it falls below that, we give them an exemption as a threshold based. That means we are looking at volume, frequency, consistency, regularity, and an element of commercial aspect including earning of profit. All these things will be relevant when we define what is business. In a way, it is going to be a huge challenge in the GST, especially in the three areas. One, services provided by the government, public authorities. Second, services provided by the NGOs, non-profit organizations, or the charitable organizations. Now, while it may not be that much a challenge in administering the supply of goods provided by government or non-profit organizations or NGOs or charitable bodies, a host of services provided by these entities could be a subject matter of a huge challenge unless we define them properly in the model GST law or the schedule. Let me give an example. Today in the central VAT law, we define service as not with regard to business or commerce. While I said that prior to 1/7/2012, we administer services from 1994. Up till 2012, we defined service as something which is done for the commercial or business or commerce purpose. That approach was define a service with regard to a particular element of service, be it a financial service, telecommunication service, stock broking, life insurance, business auxiliary service, manpower recruitment supply agency, etc. Define individual activity and say this is a taxable service and say who is a taxable person with regard to that particular service and define them. We had approximately about 118 services. We defined individual services and said who is a taxable person for that individual service provided or to be provided. But when we went to the negative list from 1/7/2012, we for the first time defined service with a definition. We defined service,
For example, if a school sells notebooks and living books to the students, not in the course of others of business. If the turnover limit exceeds the threshold limit, can it be taxable?
Yes. I will park this question, I have noted it. Okay. When we complete the 6 cycles, we will come back to that. I will answer to your question. Your question, if I have understood correctly, what you said was, in a school, supplying uniforms to the children against charge is crossing the threshold limit of, let us say, 10 lakhs, 15 lakhs, whatever it is. Should that get registered? Should it pay GST on the supply of uniforms to its children against a consideration? Is that what I have understood? I will flag this question and answer that. Now, when I come to the service, we define service as an activity. You look at how we have defined service in the service tax regime. We define service as an activity done for a consideration by one to another, where it is not a mere transfer in title to the goods or those which are included in the negative list. The service definition today, what it exists in the central VAT law, defines service as an activity. It is an activity done for a consideration by one to another. That means the service cannot be performed to self. There has to be 2 parties to that at the minimum. Done for a consideration, provided by one to another, where it is not a mere transfer in title to the goods, because mere transfer in title to the goods was the domain of the state VAT, and those services which are listed in the negative list. For example, a member of the parliament sitting in the parliament providing some services. It may be for a consideration. He is not in the contract of employment, let me tell you. Now, if we don't define that those are the activities which the legislature consciously wants to remove it from the scope of the tax levy, we put it in the negative list. Now, my friend said about the education. Any education which leads to graduation provided by a recognition under law, a degree, we said it is negative list. Any services provided by an health care center to the citizens run by the government hospital, it was a negative list. So, even if an activity for a consideration provided by one to another is satisfied, if the government intends that such activity should not be coming with the mischief of service, we put in the negative list. So, the definition of service was activity done for a consideration by one to another, where it is not a mere transfer in the title to the goods or immovable property, but it also is not included in the negative list. Now from that definition of a wide ranging, rather I would say it's an unfettered way of defining services in the existing service tax law, we're going to come into what is in the course or furtherance of business. Now this is going to be a huge challenge because in the government today, government is a huge provider of service. They not only perform, the government not only expected to perform the sovereign functions, regulatory functions, it also does a certain functions in the compete jurisdiction, what we call it as compete with the private sector. For example, today Department of Post, India Post runs as express parcel service. India Post also runs speed post. India Post also provides the passport at your doorstep. Insurance. These are all services which are also performed by private entities in the private sphere. So also the Indian Railways. What does it do? It transports passengers, it transports goods. Transportation of passengers, transportation of goods is a complete jurisdiction. Sometimes the government functions will be so camouflaged that you may find sometimes even the basic activity like police, security, that can also be in the complete jurisdiction. For example, if the state police is provided for safeguarding the security of the state, let us say legislative headquarters, that is in the sovereign function. If the same state police is hired by the cricket association for running a cricket match, they are required to pay the charges for the police personnel deployed around the cricket stadium. This is not law and order, though it's indirectly covered, but it is promoting a business and commerce of some cricket association of India. They may be asked to pay the consideration. The question is, when policemen are paid the wages and salaries for protecting the government department, is doing a sovereign function, when the same personnel are provided a remuneration for protecting, for maintaining law and order in a cricket stadium, they are being reimbursed the charges. Should that be treated as a service? Today in Central VAT, because of the definition of activity for a consideration provided by one to another, we are in a position to collect tax on those activities. Tomorrow the question will come, somebody can challenge, is government is in the business of providing security? The primary object of the government in raising the police force or the paramilitary forces is to provide those sovereign functions, maintenance of law and order. Is this force was primarily raised for the purpose of business? The question will come. Whereas we didn't have this challenge today with the definition, so that's the challenge of in the course of furtherance of business. Then the question naturally will ask, if it is going to be a delimiting factor, why at all bring this complexity? Why don't you give an opaque or open-ended definition of supply, not to delimit with business? I have given you all the 6 VAT laws differences. Everywhere it is either enterprise, business, or in the course of furtherance of business is a limiting factor, and we couldn't have defined it anything other than those limitations. The next is a taxable person. Who is a taxable person? Taxable person is a person who is registered or required to be registered. That is how the model GST law defines. Now, taxable person can include every juridical person, natural person, legal entity in the form of a public limited company, private limited company, LLPs, one-person company, associated of persons, proprietors, or for that matter, including government. Now, we have provided a schedule approach, Schedule 4 in the model GST law, which is indicative in nature, where it said when government while perform those are the functions listed in that schedule need not be treated as a taxable person, but minus those functions, wherever the government is providing any activity which is within the definition of supply shall be treated as a taxable person. Today government is a taxable person. In the central VAT law, in the services, we have provided a very narrow definition of government. We define government as central government or its departments, state government or its departments, but does not include any public corporation or any undertaking created either under the act of the parliament or of the state legislature, whose accounts are required to be maintained in terms of Article 150 of the Indian Constitution. It is such a restrictive definition of government. That means those of the entities whose accounts are not maintained in terms of Article 150 of the Indian Constitution is not a government for us. The tax law has defined, and we have borrowed the same definition into MGL. The model GST law also carries the same definition. So, taxable person is important. It has to be defined as a person who is registered or required to be registered. Who is required to be registered? Liability to register. Schedule 3 of the model GST law will discuss in detail, which will be taken in a detailed manner for you in the next session. The next is a taxable supply. Taxable supply, by this time you know all. Taxable supply is a supply which attracts levy of GST under the GST Act. That is what it is. It is other way defined as a taxable supply includes a zero rated supply but does not include an exempted supply or an out of scope supply. What is an exempted supply? An exempted supply is a supply which is not subjected to tax or exempt from payment of tax in terms of section 10 of the model GST law, or it is included as an exempted supply in the schedule of that act. What is an out of scope supply? Out of scope supply is a supply which is not a subject matter of GST. Today petroleum products are not a part of GST, they are out of scope supply. Alcohol for human consumption is out of GST, it is out of scope supply, right? So these are the things which you have to keep it in mind as a supply concept. Any questions please here before I proceed further? I think I have laid the foundation for the concept of supply.
So you said,
Yeah.
So you said that the consideration is the basic element in supply.
Yeah.
So when there is a goods are consigned by one to stock transfer, there is no consideration. Whether it can be called a deemed supply or
That is why we have listed the supply from one taxable person to another taxable person without consideration.
deemed supply.
Yes.
So without consideration also it can be.
Law has
So
mandated
there is an exception to this.
Yes. This is the basic concept. Now, this will further be vetted by section 3 of the model GST law. We will discuss that. I am still on the background.
Shall I repeat?
I know, but your question I am very clear. Now, in this case, educational institution. I'll come to that. What I am replying to you, I am replying to your question. I have understood your question fully. Your basic question is, it's an educational institution supplying uniform to its own children against the consideration, are they taxable and whether GST is payable if their turnover of that supply of uniform is more than 10 lakhs. This is the question. The answer to your question is yes. For the simple reason that if it is, this is how we are going to define what is the services which are, I am asking the answer, I am answering your question, is it a supply? First. Second, is it chargeable to GST? Right? That is the second question. Now, chargeability to the GST will come depending upon your schedule approach, whether you would like to provide a negative list, whether you would provide an exemption, whether it is a supply. First, let us understand that concept. One, what is supply? Supply of goods. Uniform is goods. Any doubt? No. Second, is it done for a consideration? Yes, it is not given free of cost. The charge is to the parents. Second, fully paid. Third, is it in the course of furtherance of business? What is the school is expected to do? School is expected to do teaching of the children, bringing up them, there is an academic curricula for them, they provide infrastructure for that, they collect tuition fees, collect the fees in the form of consideration. While tuition fee is not a consideration for an economic activity which can come to a supply, but certainly selling of uniform is not a part of an educational curriculum is what I would say. Please park this for a moment, why I am saying this. The fourth aspect, is it done by a person who is taxable? Educational institutions per se today are not the persons completely exempted as a taxable person. In the central VAT law today in services, educational institutions are covered under negative list only to the extent that they are providing education for which they collect the tuition fees. Any auxiliary services provided by an educational institution in the course of its running of its conduct of activities may be a subject matter of tax. Transportation of children from their residence to the school, it could be an outsourced model, it could be done by the school per se, right? Either the school can run its own transport or it can tell a private contractor to be outsourced, whoever can be done, the consideration could be paid by the children, right? It can also be building auditoriums. The auditoriums can be used for their own children, for their cultural functions, for their annual function, etc. And the auditorium can also be rented out for private persons. They earn interest on that, they earn the rental on that. Now, many times in education institutions, apart from doing their own curriculum for which they are recognized, they also provide, for example, any engineering college today, they have a pre-counseling center. Any job appointment, any campus selection happens, the college says, I will provide a pre-counseling for your placement education, pay me 7,500 rupees, I will conduct a weekend classes for you. Is this training provided by the school is within the scope of the graduation of engineering? How can you call that as an education exemption or negative list? Right? Now, similarly, many of these deemed universities today provide a bridge course. While you do your BCom, you also do a computer application. That's a part of your academic thing. They may additionally charge you certain consideration for the additional credits which you may earn while you graduate with one qualification with additional skill set. That may not be a subject matter of taxation, but when pre-placement counseling happens for which charges are collected from the student, that is not within the education. Now, I have given you a perspective of the education sector. Education sector basically covers primary core function of adhering to a curriculum which results in graduation or award of degree. If you are on a state board prescribes the syllabus. You follow that, collect the tuition fees, provide the education, you recoup your expenses. That is perfectly an activity which can be kept outside the scope of levy. It may be supplied, but it can be kept out of the scope of the levy by putting in that negative list. But those activities which are indirectly done, which are not directly contributing to this education, which is not the intended scope of this, we can still keep it outside the negative list and we may still charge GST on that. Today we are charging service tax on that. Tomorrow there is no reason why in the post GST, a student transportation from the residence to the school, if the school charges as an additional consideration, why it should not be treated as an auxiliary services to education and charged to GST? Because why I am saying is, you have to keep it in mind while we talk about taxes, especially consumption taxes, the tax induced distortions in the production and distribution and consumption should be kept minimal. That is why we are very, very restrictive even when we are talking about services provided by government. Government services, when they are purely in the sovereign power, in excess of the sovereign authority, clear we are that it has to be under negative list. But when they are in the competing jurisdiction, they have to be treated on par with the private enterprise. The same logic I said, while the uniform the school may provide, the school uniform is a slightly difficult situation than the transportation of the children from the residence to the school, but uniform selling is not a part of the activity. The school may prescribe an uniform. It can be supplied by a private guy. It can be procured centrally by the school and supplied, but that is still can be treated as outside the scope of educational curriculum for which they are recognized to run education institutions. So according to my view, I think there could be different view on this all, but I would say that supply of school uniforms for a consideration by a school is not strictly governed by within the meaning of the tuition fees which you may collect for adhering to a curriculum for which you can be under negative list. There could be different perspective. It is just a perspective, yeah. Yeah.
Definition. Whether this exam what he has put,
Right.
whether that will come in.
Yes. I am coming back to the definition. When I said in the course of furtherance of business, I mentioned to you about the business. When I said about business, I said it's a trade, manufacture, vocation, profession, calling, or any activity incidental or ancillary for that object. Now, selling of uniforms. Selling of uniforms is an activity for a consideration. It can be done by any private person. You prescribe uniform, I will buy it in a market. It is another matter that you centrally procure and give it to me. But you may give it me at a subsidized price. But my needs are met differently. Please keep it in mind that when we talk about consumption taxes, what is that ultimately the customer is receiving is very, very important. This is what I will be talking to you on the business test later slides. What is being received at the customer's mind? When I am buying uniform for my child, am I seeing that as a part of education that my child is receiving? Or is it that I am seeing that something which is consumable, tangible, which I am consuming for my personal consumption? It may be another matter that the consumption is directed by the school, but this is not to be perceived as I am receiving the education. That is where the business test should be that much intricate. When I talk about the business test, let me tell you how depth it can go into that. But as I told you, my view is only a perspective. There could be a counter perspective. But you have to reason out as to why it will be an education will be a part of a supply. Because we are talking about supply and we are not talking about taxable supply. A taxable supply can be quite different. If there is an intent of the government, it is within its sovereign right to say it is out of scope supply, or it can say it is a negative list supply, or it can say it is an exempt supply. Each has its own implications in terms of input, credit, apportionment and other legal implications. I am only talking about a basic concept of supply. It is for consideration, it is goods, it is not in the name of running a school, it is a business, right? Profit may not be the criteria. As I told you, business need not be with the profit motive, and it is done by a person. Obviously, a person like education institutions, when they are providing activities which are not directly connected to education in the form of tuition, coaching, I would still say it's a taxable person, provided in a taxable territory. It should be fulfilling that. And today let me tell you, in the service tax, with the definition on activity for a consideration, we have been taxing all these activities. When an auditorium of a college or education institution is rented out, it is subject matter of a tax. My friend here is sitting here, my colleague in the anti-evasion in Kerala. Cochin University of Science and Technology, which is charging affiliation charges to all the colleges for accreditation to the university, which results in issue of degree, that accreditation fee is not covered within the tuition fee what we have defined in the negative list. For that matter, any ICSU school or a CBSU school which pays the money for accreditation to these are all societies. CBSE is a government society, ICS is another society, autonomous body. Any accreditation fees paid by this institution for getting the school accredited is a matter. I am coming to that. You can sit and raise the question, please, no issue on that. So basically, what we say is that this is not, even though it is directly connected, in the sense that without an accreditation you cannot even issue a degree. Even that has been held to be not covered in the negative list, which says that anything which is an activity leading to award of a degree. That means a lecture-read training program, which is a classroom session or a distance learning, is an activity directly going by the educational award. An institution getting a recognition for the purpose of award of degree is indirectly connected, not directly connected. That is why we said it is a taxable activity, and we are collecting service tax on that. Yeah, no, please. Yeah. You see, basically we have education is one, vocation is one, sports we have done specifically because in this country, that's what I said, these are all depending on economic policies. Today, anything which is developing skills, vocational skills, or sports, we have exempted it. We have defined as an activity subject matter of a service tax, but we have given exemption. Sports coaching is exempted, provided it is done by certain bodies, Sports Authority of India or any of those. If it is Prakash Padukone Academy which is teaching badminton in Bangalore, they are registered with service tax, they are paying. Or for that matter, Pullela Gopichand's Academy in Hyderabad, they are registered with us and they are paying service tax. It may be another matter, Sports Authority or SAI, which is running programs under the Department of Youth and Sports Affairs, they may be exempted by this notification. Yeah.
Sir, you say exempted or put in the negative list?
We could have both the options, but today many of them we have put it in the exemption list.
So, can you explain the
I will come to that. I'll come to that. I'll come to that later. I am in the supply. I don't want to divert, but I have noted your point. Is that point? Yeah, please. You see, toll way collection, there are two ways on that. Toll is collected for what? Right of usage, access to the toll road. There is another aspect that the toll charges are collected by an outsourced agency. We normally have NHAI, National Highway Airport Authority. Highway Authority is a statutory body, and they have one consortium which basically constructs, and they are also given most of the time the maintenance and also be a party to earn the revenue for the expenditure, because they have been given soft loan, things like that, interest subvention, and they appoint another agency who is basically the tollway collection agency. The tollways are auctioned at the beginning of the year. NHAI, the Road Development Authority, and they put together, consider that this is the revenue can come from these access rights. Auction it, auction money is paid, and that is for access. That is for access of the roads. Access to the public ways, highways, we completely consider as a negative list. We don't tax on them. But any services rendered for collecting the toll charges is a service. That means the toll company which puts up the toll booths and collects the charges, and they charge some money to the National Highway Authority in the form of their consideration for providing this collection and remitting that remission to the toll person who has won the contract. But there could be some issue when this contract is allotted, let us say it is for 20 crores. In a year, actually the recovery is around 24 crores. That 4 crore we consider always as an additional consideration which is retained by the fellow who has bidded for the contract, and we say he has to pay the service tax on it, and he is paying the tax already. So toll access is negative list, but services associated with that access, collection of the toll charges is a taxable activity.
The toll as such is a non-taxable, it's a user charge only.
That's what I said. Access is basically not a service, and especially access to public roads, highways. Certainly we are not covering on
Same
that.
is the case of royalty also.
No, royalty is different. Royalty, for example, today's spectrum, or for that your mines, royalties, or your state beverage corporations running the business of liquor business. They pay certain amount to the government for giving them an exclusive right to run these liquor shops. These are business activities. Now, toll is access to the roads only is negative list, but any services related to the collection of the toll charges, they are activities of service, they are subject to service tax, and post GST as well they will be subject matter for taxation for us. Any questions further?
You said supply is yes, sir.
Yeah.
What about the tax liability of a person providing service and goods in an international flight?
Well, ma'am, I think that will go by the place of supply provisions. When you are talking about on-board services, we will take examples of supply of goods on board a vessel, aircraft, or a foreign going aircraft, or on board a vessel or a aircraft services. Okay. Now, one way of looking at this transaction is, this is a separate transaction by which of the place of supply rules. I think the topic which my future speaker will talk about that. When we talk about goods or take on board, let us talk about a train. The train originates from Ernakulam, and let us say it goes to Delhi. The on-board taking goods on board can happen at the point of beginning of the journey, embarkation point. Something can be picked en route. Something can be cooked within the train. I am talking about a catering service. Now, the place of supply in respect of all the 3 variants could be different. Sometimes when we talk about consumption of goods or consumption services, when a continuous action like a continuous journey happens, internationally, I think the distance travelled vis-a-vis the total consideration is divided. Many times some of the very advanced tax administration do have an apportionment principle. Suppose you have consumed about, let us say about 1,000 rupees worth of food products during your journey from here to Delhi. And let us assume that the place of supply provision says the place of supply on board the goods shall be the place where the goods are taken on board at the point of starting. So the revenue will accrue, the collection will happen in Ernakulam when the journey begins, but since the journey happens across the taxing territory of India up to Delhi, all these participating states, to the proportion of the travel done in terms of distance or time consumed or whatever it is, this tax revenue of 1,000 rupees can be allocated. That is the most scientific method. But many of the VAT administration don't follow this precision in terms of allocation because of the practical considerations. So one way to look at it is, we say that the place of supply of goods taken on board shall be the place where the journey commences. Thereby, the origin state retains the tax revenues. The other states do not. Right? This is one way of looking at it. Similar in the case of services. So those are place of supply provisions, but there could be prescriptions. The prescription is generally, I think, when certain things gets consumed during a passenger transportation or a continuous supply of services, we could have different prescriptions done. So we will discuss with that when the place of supply happens. I hope Harish will discuss on those on board, taken on board, etc. You will define on that. Any other questions? If it is not there, let me proceed. I hope I answered some of your questions. Goods will have to be tangible. What is tangible? We have defined tangible property. I think there is a lot of criticism on that. Tangible property means something which you can feel and touch. So people have said that so long as it is touch is possible, but if you said what can be touched and felt, electricity is felt, so is it goods? And I have told them that electricity is very much goods. Electricity is very much goods in central excise tariff. Or for that matter, your air conditioning is goods. Heat treatment is goods. Or for that matter, gas is goods. So anything which can be touched and felt is tangible. We have defined intangible property as property other than tangible properties, intangible property by a circular definition. So intangible means something which is not physical. Now, but that is a very, very difficult proposition. Today, when you have copyrights. When there is a permanent transfer of copyrights, you tax it as goods. When there is a temporary transfer, we treat it as a transfer of, it's a provision of service. Now the same copyright, depending on the title transfer, it becomes goods. But when title is not transferred and only possession is transferred or use is transferred, it becomes service. So intangible is that much challenge in terms of defining. But intangible is simply you can understand something which is not tangible. What is tangible is something which is physical. Yeah. It's very, very difficult. For example, some, I don't know what, see it's easy. Anything which can be perceived by senses could be goods. Anything which is not perceived by sense is not goods. That's what you're trying to say. It's very, very difficult. That's what I said that. Sometimes, you see, there is a whole lot of things you don't perceive as your, that's what I said. Even when this definition of felt or touched, people have no problem in the touch. But when they say felt, there's a whole lot of things you are talking about a sensory organ perceiving something through the sensory skills. You say it is goods, it need not be goods. And I agree with them to partially. So that is why internationally, in fact, we talk about something called corporeal and incorporeal. When we talk about intangible, we generally talk about rights, assignments, grants, transfers. We don't talk about goods. But many times this assignment, transfer or possession or lease, rental, etc. can be related directly to the goods. Intangible goods, lease, renting, immovable property, with physical but rights access to that. Access to the premises is a service, intangible. Copyright, trademark, anything which is innovative, human intellect, creativity can be called as tangible, intangible, but that's not final. That's what I said. Tangible is conclusive, intangible is other than tangible. That is how we try to do the definition. When we define services, what do we define? We say anything other than goods is services. Now that's a very wide definition. That is why we have to put a marker when we talk about the supply. We need to say in the course of furtherance of business, it is for a consideration, etc., etc. Today I don't have to worry about that, but since I am expanding the scope of the taxable event, I need to have a marker to see that non-casual transactions don't get attract tax liability in the GST. So if this concept is clear, let me quickly go through the other issues on that. Now this is another perspective that when all the elements of the basics of supply still fulfilled, you may still consider as a out of scope supply or a supply which is not subject to tax. Negative list is one example I gave. Something like petroleum, which will fill up all your 6 basic elements, we will still say it's not supply for the purpose of GST. Similarly, when any one of these elements is missing, still I may say it's a subject matter of supply. I have already said supply without consideration, I provide as a deemed supply in terms of an entry in Schedule 1. Similarly, there could be many situations where, for example, if you look at my model, if you look at our model GST law, we have said in the case of importation of service, whether or not for consideration, whether or not for the furtherance of business, we have entered that. I think when we discuss that, we will discuss as to what is the significance when we say when some element is still missing, still we may say it's a subject matter of supply under GST. Just flag that issue, whether or not for consideration, we have already touched. Whether or not in the course or furtherance of business has got other implications when we discuss about this, one of the element is missing. Now another aspect is that before I go to this model GST law, when we say one of the element is missing, the fundamental element I said for GST has to be supply of goods or supply of services or both. Now let us take the example of a transfer of a going concern. All of you must be aware in the VAT law, you don't tax a transfer of going concern as a sale, even though it's a sale for a consideration where the itemized value of goods and services or rights like trademark, goodwill, etc. are not valued. When a transfer of going concern happens, it can happen from one existing entity to a pre-existing registered person by way of merger, amalgamation, or for that matter, a new takeover, etc. Now, internationally, transfer of going concern is a supply. Why? Because it's a sum total of the goods and services. Except the fact, a business when it is transferred, it may also have transfer of title to the immovable property in terms of land, buildings, plant, machinery which are permanently attached. But substantial part of the business when it is transferred, it can consist of goods and it can consist of services. But administratively and practically, it may be impossible to separate the value of the immovable property vis-a-vis the movable property or for the matter rights. And therefore, as a matter of administrative expediency, many of the VAT administrations exempt this transfer of going concern as in itself a sale, but it is not a taxable sale. We also do the same thing in the services. Today, transfer of going concern has an element of services which are also part of the transfer of going concern in terms of trademark, goodwill, patent, design, right to use, whole lot of things come on that. So we have given an exemption when transfer of going concern happens, we have treated as a supply of service, the provision of service, and we have given exemption notification and we say that is exempted. One of the reasons why we have considered a transfer of going concern as a supply within the limit of the act, but it will not be a subject matter of a tax for the reason that one, many of the time when transfer of going concern happens, the rights and liabilities are passed over. That means if there are any input tax commodities are lying in stock, the recipient can take credit of it, neutralize the business cost. Otherwise also, if you collect the tax on the going concern as a supply, it can be taken as a credit at the recipient end if it is in the further course of business. Either way, the revenue neutrality is established. Why tax it at all? Especially when it could have elements which may not be a subject matter of tax, either under sale or under provision of service. Post GST also, the challenge will continue because a transfer of going concern is not merely a transfer of goods, transfer of services, but anything could be more than that. So the best international way is that treat it as an activity within the scope of supply, but provide an exemption. Probably we may consider that. Some of the VAT laws put that as a schedule. Annuities, pensions, social security, transfer of going concern, all these things are supplied within the scope of GST, but they are provided as a schedule and not subject matter of tax. That is the international approach. So that is very important. So one of the element may miss, but still the law mandates that it shall be treated as a taxable supply, still it is valid. Somebody cannot say that you have said 6 elements are required for supply, but something is missing. Can that be a supply? Because the definition of model GST law will cover all these things, but something may still miss, but we will put it in the guidance that it will be subject matter of tax, still miss, one of the element is missing. Now let us get to the section 3 of the model GST law. In fact, I don't know how many of you know, when we drafted this model GST law, including your CCT, we are only about 25 people with the only one USP to our credit, that we administered the tax in one way or the other during our career. Maybe your CCT has been administering the tax for the last 2-3 years. Maybe some of us in the central VAT, we have the knowledge and experience of administering for maybe 2 decades or 3 decades. So when we drafted this supply definition, all that I can tell is one of the disclaimer that I am not an authority on supply. All that I have the knowledge is, yes, I have administered Central Excise Act, I have administered the Finance Act, or maybe my colleagues in the state VAT would say, yes, we have administered entertainment tax or entry tax or the sales tax or the VAT. Now when we define supply, one of the fundamental approaches, we looked at the international law. That is one of the reasons I put across in the beginning of the class that let that icebreaker be there. Because the human mind is that something which is not comfort, you start resist. You look at the critical aspect of it, but it is good to be critical, but it is also essential that what went into the drafting of this important, all important concept. A number of issues came up. In fact, today we are all dealing with on this section 3 on supply, or with regard to inward supply, outward supply, input tax, or for that matter, relation to exempt supply, zero rated supply. We have not less than around about more than 300 pages of feedback which has come into, which we are examining as a committee, including our Commissioner of Commercial Tax. We have over 40,000 pages of feedback on this model GST law. The responsibility has been onerous. Sometimes when we look at the feedback, we understand what important responsibility was given on our shoulders when we drafted a section like this in the model GST law. Maybe had we had this benefit of this collective wisdom, we would have drafted better. But a priori, we have to do something to communicate this is what is in our mind and this is for the world at large to now respond and improve the scope. That is what I said. Sessions like this can lead to an intense deliberations among you how best you can improve. My only request to all of you, my friends, is that before you criticize, give a reason as to why you feel a particular provision is not correct, and the time is too short for us, provide an alternative prescription. And if you can justify your alternative prescriptions and you can well articulate the alternate point of view, let me tell you, at least there is a team of at least 15 dedicated officers of both CBEC as well as the state governments. All the representative states will give a serious thought to it, and maybe when we go back to the drawing board again, all that what you feel what should be improved upon would get a due note of that. And I feel that the tax administration has an onerous responsibility in exercising themselves in giving this feedback. That's what I just want to priorly put it across. Let me get into supply definition. Section 3, meaning and scope of supply. Now, when we talked about a VAT Act or an Excise Act or a Finance Act which deals with services, we didn't say what is a meaning of service. We defined what is service. We defined what is manufacture. We defined what is sale or a dealer who is said to be doing the sale. Why use this word meaning? Now, if you look at legislations, liberalized legislations, there are certain things which are required to be explained as a matter of obligatory part of the government. When we talk about a future law, we look upon drafting the law in a set wherein we feel that we are an independent country. While Sale of Goods Act or Excise Act or for that matter Customs Act was handed over to us, it was a different government with different object. We are a sovereign, independent, democratically constituted society, political society. So when we say meaning and scope of supply, please don't look at it with a critical mind. What am I trying to talk about a meaning in a law? All these taxes are going to be self-assessed. Our taxpayers deserve the right. It's no more a grant of the government, it's the right that they should understand what do you mean by meaning of supply, because they are going to determine on the dependence of supply, is it a taxable supply? If it is a taxable supply, is it an intrastate supply or is it an interstate supply? If it is an intrastate supply, you have to pay CGST, SGST. If it is an interstate supply, you have to pay an IGST. All those are going to be self-determined, self-assessed. And tomorrow, should anything be correctly not understood, the compliance is not happen, you will impose penalties, injunction, prosecution, etc. So it is in that view we set meaning and scope of supply. When we say meaning and scope of supply, that one of the earnest underlying objective behind drafting that section head is to see that we explain what we mean. But still, I would say that when we drafted, we still have our legal jargons like notwithstanding, all those things we have done. But maybe I wish we could have done a draft like model GST law of Australia. But this is the purpose. So we said meaning and scope of supply. When I say scope, what is that as the legislature intends by supply? Meaning and scope is basically what you can look at Malaysian VAT law. It also talks about meaning of supply. Let me get into this. First, there are 6 or 7 elements you can look into that. First part is includes all forms of supply of goods and services such as sale, transfer, barter, exchange, license, rental, lease or disposition made or agreed to be made for a consideration in the course of furtherance of business. Now all these things sounds familiar to all of you except the word made or agreed to be made. Am I right? You have not seen this made or agreed to be made in the international law. Neither in the UK VAT law, nor in the EC Council Directive, nor in the Canadian GST or Australian GST. We have added the word made or agreed to be made. I will give you what exactly the purport behind it. Now, we said inclusive. We do still have an alternative even today. We can define supply as supply means all form of supply and include sale, transfer, disposition, lease, rental, assignment, etc. We can still see. Whether supply includes all forms of supply, supply means all forms of supply, to my limited understanding, I think it means the same. 1. Why have we used the word such as? Some of you must be understanding, when we use the word such as, the object is to expand the meaning further. It is such as means it's expansive. Now mind you, when we talk about a taxable event, the legislature would like to have as much leverage as possible. but at the same time, it should be certain. One of the fundamental principles of taxation, the canons of taxation, is certainty. Now, does this definition provide such certainty is what we need to examine from that point of view. 1. Sale, all of us understand. What is sale? The Sale of Goods Act will still be relevant. Transfer. Transfer is something which is a species of the same thing. It can be done even without a consideration. Barter, exchange, license, rental, lease, we are familiar. Or disposition. When we use the word disposition, this principle of adjustum generis will apply. Adjustum generis means basically the word or expression used in the group of words shall partake the definition and the meaning of those words in which company it appears. Am I right? Now that disposition will have to be read with that limitation. Now comes the important phraseology called made or agreed to be made. Why? Today, when you talk about levying VAT or a sales, for you the conclusive thing is a sale has to be conclusive. A tax invoice, a sales invoice issued is your time of supply. When do you issue a tax invoice or a sale invoice? When you transfer the title to the goods. When you make a sale on approval basis, it is provisional. It is an agreement to sell. Only when the customer accepts that supply sale, then you raise the invoice and then you charge it in your VAT return and pay the tax. Am I right? So one of the elements is that it has to be conclusive transaction. When we talk about services, services as I told you are intangible in nature. When they are provided, where they are provided, when they are consumed, all these are subject matter of legal fictions and deeming proxies. Now in the current central service tax law, we said service, actually we have said provided or agreed to be provided, made or agreed to be made, this phraseology is used. Now when we talk about made or agreed to be made, or provided or agreed to be provided, what we are trying to capture in the essence is that a taxable activity in terms of sale, in terms of provision of service or supply of goods may not have actually conclusively happened, but there are certain activities which would have triggered those activities. When I talk about the time of supply provisions, I shall explain this in little more detail. Today, in order to collect a service tax on a service which is intended to be provided in future, I need not actually provide a service to account for the service in my tax return. The day I issue a taxable invoice or the day on which I receive the consideration either in part or in full, I am required to account that on that day when I received the issued an invoice or received the consideration either in part or in full for the purpose of accounting the tax liability. Now this is what the concept we have provided, made or agreed to be made, but this is implied. Many of our critics of the draft law will say, in any case in your time of supply you can provide when the tax has to be paid. For the taxable event per se, you don't have to bring in this complexity. That's another perspective. We will examine it as and when it is crossed. But today the object behind providing this word, made or agreed to be made, is essentially to capture when we are defining a supply as a composite definition for covering both supply of goods as well as services. Since services will attract tax even when there is an agreement to provide a service, so we have incorporated in the taxable event of the supply itself per se in order to create a clarity in the thinking. That's the purpose. Some of you, when you teach your officers, you must explain this concept. What is this you are talking about? Especially for my statewide friends, I would say that you have never taxed a transaction unless the sale is conclusive, which is evidenced by issue of a sales invoice. There was no concept of a tax being levied under VAT or sales tax when a sale is not concluded. The consideration could be future. It could be deferred consideration. But sale simpliciter should have happened on the day when the tax liability has to be fastened. Whereas in services, there is no such constraint. Since GST is all about goods and services, the supply definition being common to both, we have tried to build in the concerns which may have in case of services by bringing made or agreed to be made. Any questions here?
That paid or agreed to be made is common for both goods and
Yes. It has its own challenges. I'll come to that. Now, what it means, suppose you receive an advance, but you don't really sell the goods, but the received advance is adjusted against the future supply. Let us say I have to deliver 10 televisions to you. As a wholesaler, I ask you to deposit about 50,000 rupees before I deliver 10 TVs to you at the cost of 10,000 rupees per television. The day when I receive 50,000 rupees as an advance and I have adjusted it against a supply of 10 TVs which may happen after 1 month, the day on which I have adjusted this consideration toward the future supply, the GST law mandates you that you shall issue a taxable invoice. You shall account for the taxable invoice in the tax return and you shall pay the tax by 20th of the following month, and you may also decide the rate of tax what was applicable at the date of filing of the return. It's another matter that the person who has actually paid the advance may not be in receipt of the goods for which alone he is eligible for taking input tax credit. That means when we are talking about a tax liability as an event to the date on which he can take an input tax credit, today there is no disjoint. Tomorrow in the GST there will be a disconnect. Yeah.
When no advance is received,
Then there is no consideration received, no invoice. That's what I said. When no advance is received, that nothing has happened.
then also
Made or agreed to be made will have to be understood in terms of contractual interest. That can only be three things. That's what I said. Time of supply provisions will explain to you. When I say made or agreed to be made, it can be explicit, it can be implied, it can be written down, but it can happen only when you issue a taxable invoice or receipt of a consideration or actual provision of goods or services, whichever is earlier. If it is a revocation, your sales returns, you do deal with that. There is no concept of a service return. In the GST law, we have not talked about the bad debts. We will collect tax, but we will not refund it if the service is not conclusive. That's a different issue. We'll discuss later. Okay, this is the first leg. If every one of you are comfortable, can I proceed to the next one? I think we'll break for a tea. So you have to break me, otherwise I'll keep on going on that. Okay.